Well, hello everyone. My name is Dan Hurley. I am a director and chair-elect of the Vancouver Island Economic Alliance. I'm also the principal and co-founder of the Hurley Martin Group, and we focus on helping organizations tell their stories, engage their audiences, connect with decision makers, and help them pivot for the next step in their journey. I'm very pleased to be your moderator today. And first of all, I want to acknowledge that we're on the traditional territories of the Coast Salish, the Kwakiwak, and the Nuu-Chah-Nulth peoples. And we're very pleased to be living and working on their territories. I also want to give thanks to MNP for being our sponsor for today's session. We appreciate everyone joining us here today, and we thank all those who joined us a little earlier and bear with us as we got through our technical challenge. Today is our 10th session in our video series, where we've been discussing how we can support each other during this challenging time, and as we begin our journey along the road to recovery. VIEA's mission is to unite and to connect decision makers and to inform and add to the conversation about economic, social, and environmental vitality on Vancouver Island and the Gulf Islands. Over the last several weeks, we've discussed the many programs and supports that have been announced by governments and other organizations. And this includes the federal programs such as the Canada Emergency Wage Subsidy, which became available to eligible businesses this week. And today we're pleased to have Mike Delves from MNP in Nanaimo to walk us through this program in further detail. And this is Mike's second visit to the VIEA Zoom room, so we welcome him back. But before I turn things over to him, just a few details. We're gonna have a few opening remarks from Mike, followed by about 15 minutes of questions and answers. You will find the chat box at the bottom of your screen. Simply open and type your question, and I will do my best to pose as many questions as we can with the time we have available. If we don't get to your question, please feel free to reach out to our president, George Hansen. His email is george@viea.ca. And a reminder that we ask everyone to please keep your mutes off, keep your mutes on and your videos off during the presentation so we don't present the flow of our discussion. So with that said, I'd like to turn it over to our guest, Mike Delves. Mike, welcome back to the Zoom room.
Excellent, fantastic. Thank you very much, Dan, and thanks to all of you at VIEA, and thanks for your patience as I work out the technical difficulties. You know, it's a whole new world that we're living in, being able to meet and present from our my basement. So it's good to be back. You know, it was as you said, it was about I guess it's probably about a month ago that I was here last, and we were speaking about the temporary wage subsidy that had come out. It was a 10% of wages paid, maximum $1,375 per employee. It was limited to small businesses, so businesses that were eligible for the small business deduction limit, and so that's businesses under $15 million of capital. Obviously, lots and lots of economic support required to help businesses through this challenging time. That one itself not near enough, and obviously the government experienced a flood of EI applications, and so in order to assist employers in maintaining employees, keeping the economy going as much as possible, we've got the new Canada Emergency Wage Subsidy. As you said, applications opened yesterday, so very, very busy day yesterday. I think they ended up with about $30,000 applications that went in yesterday. Over 300,000 people took a shot at it, but obviously a lot of intricacy, a lot of complexity, so hopefully I can answer some questions around what that looks like for businesses today.
Well, thank you, Mike. Absolutely, it is a complex program. In fact, I heard this morning from the Prime Minister that they were up near 45,000 applications as of this morning, and it's probably kind of much higher than that. So it's definitely a program that people are very interested in. So maybe you can walk us through the differences between the programs. So you mentioned the 10% temporary subsidy that was initially announced, and then we have the wider wage subsidy program, which can cover up to 75% of wages for companies. So maybe explain the difference between those two programs.
Yeah, absolutely, and that's definitely a critical one, and certainly one that's creating a bit of confusion. So first of all, temporary wage subsidy, the 10%, still exists. It's actually an essential component. There will be a spot within your application for the Canada Emergency Wage Subsidy because you don't double up. So if you apply for the 10%, it comes off of the 75%. The 10% is a much easier one, and it's also not benchmarked on reduction in revenue. So you could technically actually have an increase in your profitability and still qualify for the 10%. Essentially, that's helping cover some of the costs of administering COVID safety relief programs. And so definitely temporary wage subsidy still in place. There's no application process for it. Businesses who are continuing to pay wages simply reduce their source deduction remittance tax by the amount of the 10%, up to a maximum of $1,375 per employee, $25,000 total per employer. So that's the 10%, fairly easy, and obviously a lower amount, but still in place. So moving on to the Canada Emergency Wage Subsidy, this is our big program. This is a $75 billion program to keep the economy going. It's the biggest subsidy that's available for employers. And of course, you do have to be in a circumstance where you're continuing to make payroll. So this is a 75% wage subsidy, and to a maximum of $847 per week per employee. And it's based on a salary metric of $58,700. It's for a 12-week period, so it's from March 15th to June 6th is what the period that it is in. And the first thing is a revenue test. So unlike temporary wage subsidy, Canada Emergency Wage Subsidy, or CEWS as we're calling it, is based on a revenue test. So you have to be able to show a reduction in gross revenue. Now, this is one of the challenges, is of course you may have a very different bottom line, but the metric that's been put in place is top line reduction for that first period, 15%, because we realized that taking March into account, it was midway through March, the implications of COVID were beginning to be realized by businesses. So 15% reduction in March, and then the second two periods are 30% reductions in revenue to qualify for this program. There's a number of different ways to measure the revenue. So typical accounting practice is on an accrual basis. So you set up revenue that you've earned regardless of whether you received it, goes into your accounts receivable. There's also the opportunity to go based on a cash basis, because Canada Revenue Agency and Finance is recognizing that there's cash flow challenges. So you might have earned revenue, but if it's still sitting out there in accounts receivable, you can't collect. They're recognizing that's a change from normal accounting procedures. So you can choose cash or accrual method of accounting. Once you're in it, you're sticking to it. So if you're cash for the first period, you're cash for the next two periods. Revenue reductions are based on the commensurate prior month. So it's March to March 2019 to March 2020, April and May. Now, that also created challenges for recognizing that significant business model changes may have occurred since then. So they've given us another choice: use the average of January and February to check for your 15% reduction and 30% in April and May. So again, same sort of thing. Once you've chosen, either it's comparative to prior year or the average for January and February, you're into that. So those are our revenue tests and important metrics to work through, because of course these are the basis of what you're making your claims on.
Okay, so we're starting to get some questions in, and just a reminder, if you have a question, please go to your chat box at the bottom of your screen and send it to me, and I'll do my best to get to these questions. So our first question comes from Karen. Can you please discuss the conditions in which an employer can receive 100% wage subsidy, which I understand is also possible?
Yeah, absolutely. Great question. So what this is it's a calculation based on a baseline. So we've gone through sort of that revenue test to get you in. Once you confirm you qualify based on your reductions of revenue, now you've got to calculate what this subsidy is. So the subsidy is calculated. It's a bit of a complex formula, but really, if you come down to the basis of it, it's the greater of first the least of 75% of remuneration paid. So that's actually the payroll that you're paying now, $847 per week, which is the maximum, and then a zero figure for non-arm's length employees. So that's your employed shareholders and their family members. And so that's the least of those three things compared to the greater of that. And eligible remuneration, so that's a baseline of 75% of the baseline remuneration. So that's an average wage rate between January and February. So what your average pay for those employees were. So let's say, for example, you were previously paying an employee $1,500 a week. That sets your baseline. It's actually a little in excess of the maximum. I think it's $1,130. $1,129 is the baseline. So if you're paying them $1,129 per week prior to the COVID, prior to that March 15th trigger date, and then you've reduced their income subsequently because of COVID circumstances, you can continue to pay them 75% of that baseline and end up with 100% of what you're paying if you're paying them 75% less now. The goal of this program, though, and obviously the motivation that finance is indicating, is employers have to make the best attempt to cover that additional 25%. We haven't seen what the measurements are or what the review criteria are for businesses, what it means to make your best attempt to meet that 25% increase. But those tests will be out there. If you had $1 million sitting in the bank account, even though you had a revenue drop and you didn't make an attempt to pick up that 25%, I think CRA would probably give you some trouble later.
Okay. The next question, actually there's two from Justin, and they're related to the wage subsidy. I have an employee that has continued to work for deferred salary. Is there a way to get the wage subsidy if he is paid a lump sum for the period, for the time period he worked for deferred wages? And the second part of that question is the wage subsidy paid after you pay your employees, or do the wage subsidy funds go directly to the employees?
Yeah, great question. So we've got two parts there. So the metric of how much earnings are paid, the fact that you've got some deferral on payroll, I mean, you'll still have source deduction remittances to be making, even though you've elected to defer. It'd be interesting to see the specifics of that agreement. So depending on the specifics of the agreement, technically the wages are based on when they're earned, so not when they're paid. So once you're into this period of the wage subsidy, it's based on the days that you earned it, not when you paid it. So you could have some timing differences there that could allow you to get that for those deferred payroll pieces. And then from the second part, that's the unfortunate piece. Got to pay those wages first, got to make those source deduction remittances. The wage subsidy is going to come in after. And so hopefully there's some other things. One is hopefully some available cash flow for those businesses. Maybe there's an opportunity to apply for the Canada Emergency Benefit Account $40,000 loan to help you bridge. You might need to combine some of these relief measures to make it happen. But yeah, wages got to go up first, then the wage subsidy comes in. It could be some timing to deal with getting this cash out. I think the process is that May 4th, Star Wars Day, I guess, is when they're actually going to start processing applications, and so it could be some timing difference as far as when you actually receive the cash. And note that you actually have all the way out to September 30th of 2020 to apply retroactively back to March. So if you can't see right now that you're going to fall into these pieces, you can evaluate later on and apply later.
Okay. Next question is from Carolyn. Are there any subsidies available for those who have been contract receiving wages before COVID-19, but who have been collecting a retired teacher's pension?
Ooh, tricky. Yep. So that's there's definitely some possibility there. Those are actually two different things, though, contract or employee. Right, so if you're a self-employed contractor, no payroll amounts associated with that, say a sole proprietorship, for example, you're going to be limited to the Canada Emergency benefit. So that's the $2,000 a month. You may fall into those criteria. If you're actually an employee receiving T4 wages, certainly there's a possibility that maybe you're going to get some EI. The employer could fall into one of these items, but certainly you should work through those benefits to see which maybe you might fall into.
Well, that relates also to organizations that are run by contractors. So there may be organizations or associations out there who only run on contractors. So I guess this wouldn't apply for them.
Depends on the form of their contractor. So again, if it's an incorporated entity or even a proprietorship partnership that's paying wages. So we've got one piece, we've got the business. So if you're contracting out to, if you're a business who is contracting out, you might have that Canada Emergency Business Account, that $40,000 loan, $10,000 forgivable after 2022. That maybe is something that's available to you. And then it's the wages that are paid out of those businesses, out of that contract. That business may be able to qualify for either the temporary wage subsidy or the emergency wage subsidy 75% within the business itself, which it then can use to pay those wages out to the individuals.
What about nonprofit organizations?
Nonprofit organizations qualifying as well, again, where you've got some payroll. There is some additional charitable organization funding coming out from the government. Lots of metrics available on that on the Department of Finance website.
Okay. Lots of questions coming in here, so that's great. I'd like to get to as many as we can. We have about 10 minutes left. The next question comes from Chelsea. Hi, everyone. Mike, if I have a client who owns all the shares in a company and she pays herself a salary plus dividend, can she be wearing her employee hat, have part of her wages paid by the government using one or more of the wage subsidies?
Yeah, great question. Great question. So not so much on the dividend side. So it's going to be really based on this payroll piece, and it's going to fall into what this eligible remuneration is. So part of the challenge is going to be were they earning payroll in that first portion of the year, right? So that beginning baseline period is what sets the test. So if there was zero payroll there, can't increase the wages in March to fall eligible to the subsidy. So that is a bit of a challenging piece because, of course, before all this new, wouldn't necessarily have planned into that one. Definitely a possibility if they were on payroll previously, had some sort of deduction remittances paid. Really, what's that caveat is meant to put in there is avoid a non-arm's length parties who were maybe only paying themselves $500 a week previously, jacking up their wage to $2,000 a month and getting that. If you're still paying wages, you can still qualify though.
Okay. This question is from Dwayne. I have a restaurant that is partly open for takeout. And thank you for that, Dwayne. Many of my employees are working part-time, 1 to 2 days a week. Almost all are on EI or on the CERB. Am I able to apply wage subsidy to these part-time hours?
Yeah, great question. So if the individual is on the CERB or on EI, I mean, the CERB is basically saying that you stopped working. They amended that so that you've got a bit of $1,000 buffer there and still to be able to receive the CERB. So that would be if you as the restaurateur are the one that's paying that $1,000, you might be able to apply for some wage subsidy for them. And the idea behind the CERB is that you have stopped working, stopped income activity due to COVID, due to sickness, or due to looking after children or family members who are sick or kids who are out of school because there's no school. But if that is indeed the case, one, maybe they fall outside of CERB and get back on the payroll if you can keep them working as a result of these subsidies. But if it's you that's making the payroll, then yes, you could certainly qualify for the wage subsidy for that.
And then there's the provision for up to $1,000 per month to work. Yeah.
Yeah, that's right. So that was that $1,000 I mentioned. If you're the one that's paying that $1,000, you could probably sneak a little bit into both. You definitely want to be cognizant of not duplicating those.
Okay. So this question is from Stacy. This is directly to you, Mike. Are you taking on meetings right now regarding subsidies for businesses that don't fit the norm to help them organize themselves and figure out what to do and how to do it?
Yes. Yeah, all day long yesterday, absolutely. So, I mean, obviously, our goal is to help businesses through this. So, we have specific individuals working through these. I'm working through them myself with clients, and yeah, we're happy to assist because there is a lot of complexity and a lot of dollars on the table here. You know, I was running calculations for a business this morning that's receiving Stripe. They're looking at $30,000 a month is what they're sort of looking to be able to achieve out of the wage subsidy. So yeah, happy to help businesses achieve it.
Okay. Next question. The wages for the application for the first period was calculated for the current staff employed. If you hire a new employee, can we include that wage for the second and third periods?
Yeah, absolutely. And that's a really good question. It's certainly coming into play with, say, for example, seasonal workers or, you know, the great news is that you're looking at bringing people into your business, and thank goodness for that you're having an opportunity to hire new people. The difference is that you're not going to have a baseline for that first couple of month period. So you don't have a baseline. So what you would end up with is the 75% of what you're actually paying them. Wouldn't be able to gross that up to anything else because you don't have a baseline. But certainly still some subsidy available for those individuals. New employees absolutely qualify.
So the next question comes back to the question about, say, nonprofits or organizations that just have contractors. So if a business, their payroll is all contractors. So the head of the organization is in fact an independent contractor. Is there anything in the wage subsidy that allows them to qualify?
That's a no.
Okay.
Nice and easy. It's unfortunate. It's not a great circumstance. It is certainly a common business practice to be operating with contractors. Those individual contractors may be able to get some subsidy, which you can work into how your payment pieces are working between those. But if you're not on payroll, this is not for you.
Okay. Question from Rob. Do you think the government will extend the wage subsidy program beyond June 5th? And when do you think they'll make that announcement? Look in your crystal ball.
Yeah, exactly. You know what? Given how there's been an announcement of new benefits and subsidies every day since March 16th, I think the Prime Minister took off Sunday this week, but that was the first since then. So are they going to extend it? God willing, we don't have to because we're all going to be back at work. I think that's probably a dream. I think that there will need to be more subsidies to keep the economy going. But the other thing to keep in mind is I think our tally for this is somewhere close to $900 billion is the spend so far, last I checked, from Canada for the COVID measures, not just the economic side, but the health side as well. There's only so much that can come out.
Okay. This question from Mary Ruth. What happens if a company refuses to accommodate someone to work from home that has the ability to do so?
That one you're going to have to put to your labor lawyer. I don't have it's not going to impact your subsidy at all. So if you're keeping paying them, regardless of where they're working from, you might be able to get something there. But yeah, you might want to speak to your labor lawyer on that one.
Okay. We have a few more minutes left, and if there are any one or two last questions, please send them in to me, and I'll try to fit them in. But Mike, maybe talk a little bit about one of the other measures that was just announced this week, and that has to do with commercial rent. What are you able to share?
Yeah, that's absolutely right. Because of course, this was a brand new, fresh one. I think it was last Thursday that they announced this, and it's a critical one actually that's been out there for a lot of businesses. So this is primarily based around your your retailers, all of those stores that we're seeing boarded up and shut, but wanting to make sure that those businesses have the opportunity to come back. And of course, for those landlords who are out there carrying mortgages on their commercial real estate property, that's a business unto itself, and we can't forget about the impact on them. So the big question is what do we do about one of these largest costs of those businesses, and that's their rent, and on the landlord side on the mortgages. So the new Canada Emergency Commercial Rental Assistance Program has come out, and so basically what it is it's an agreement with the federal government administered by the provinces. Because they're the ones that are in charge of commercial leases, and 50% coming from the government. So basically what it is it involves an agreement between the landlord and the tenant, lessee, that there will be a reduction of 75% of the commercial rent. So there's going to be a total of 75% reduction, and that doesn't mean pay it back later. This is 75% of that rent gone. The government is going to cover 50%. The landlord then is covering 25%, and the tenant still covering 25%. So it's an agreement upon them. To qualify for this, the lessee or the tenant has to show at least a 70% reduction in their revenue.
That's great. So we've got about a minute or so left. Mike, are you able to share where can people reach you if they have any more questions or want to work with you on some of this?
Yeah, absolutely. It's mike.delves@mnp.ca. By all means, reach out. And if it's not me that can assist, I can put you together with one of our team members. We're available to work on this. Check out our website at mnp.ca. Click on the COVID measures button because there's a lot of stuff out there that's available. And again, this information is dated to the moment because it's changing by the moment. So you want to stay up to date on the measures that are out there and make sure that if there is opportunities for you, because maybe right now you're able to get through, but this could be a long ride, and making sure that you're prepared to apply for benefits and perhaps doing it early before your business runs out of cash.
Well, great. Well, thank you very much, Mike. I know there's probably more questions coming in. And again, if we didn't get to your question today, please send it to our president, George Hansen, at george@VIEA.ca. So thanks very much, Mike.
Fantastic. Thank you all. Stay safe and healthy.
Thank you. And just a reminder that today's session has been recorded. It will be on our website later today. And so please watch it again or share it with your friends and colleagues. A reminder that our next session is this Thursday, April 30th at 11:30 a.m. And this time we will be welcoming Anthony Everett of Tourism Vancouver Island. And Anthony will be speaking to us about the new Coastal Tourism Resiliency Program that was recently launched. So you'll want to join us for that. And then next Tuesday, May 3rd, we'll be welcoming Cynthia Lockery of Lockery Communications. And she'll be here to tell us about how to do storytelling in social media and your emails and presentations to connect with your customers. So feel free to pass that information along. If you're not getting our notices, please go to our website, VIEA.ca. And until then, let's continue to keep good company and have a wonderful day. Thank you.